Alright, thank you guys so much for tuning into today's video. Today I'm going to be recapping the trade that I took on May 14th, 2025. And it was on a Wednesday, and my model was a 15-minute model. And let's dive right into it. So to begin to recap yesterday's trade here with you guys, I wanted to point out the higher time frame objective here. So let's take a look at this hourly candle. So this hourly candle here, with the way that we close here, my best assumption is that we're most likely going to take out this hourly low. And I'm pretty much bearish, right, for the next hour. Because if I want to see prices take out the hourly low, that means I am favoring prices to continue lower. So I'm bearish. I know that I'm going to be bearish for the next hour or so, right? So that means on the lower time frames relative to the hourly time frame, I have to find some sort of bearish model that aligns me with the bearish hourly order flow. So what I mean by on a lower time frame relative to the hourly, I mean, the 15 minute, the 30 minute, one of those two time frames will provide me with a model that aligns with the hourly bearish order flow. And one thing I did want to mention here too is that we did take out previous day high here coming into the morning session, or like London session. So it is good that I didn't rely on the daily objective, because the daily objective has already been taken. And you guys may not see this, but this high right here, right where my mouse is the 6 hour candle's high. And we actually took out that 6 hour candle's high, and then we created this bearish hourly candle. That means that I can't rely on the daily time frame because we took out the daily high, and we also took out the 6 hour high, meaning I can't rely on the 6 hour time frame. So if I know that I can't rely on those higher time frames, such as the daily, the 6 hour, the 4 hour, right? My best bet is to zoom into the hourly time frame to possibly find a even more zoomed in approach. It doesn't mean that I'm completely ignoring what the higher time frame is telling me, but I have to then be a little bit more nimble, because I understand that this is just a hourly bearish model, right? I'm not targeting I'm not targeting a weekly low or a monthly low. I understand the parameters and the objective of that specific trade here, which is the hourly low. I'm not targeting for, rock bottom. I'm targeting only what the time frame and what the objective is telling me, which is the hourly low. So to zoom in just a little bit, like I said, I'm gonna now find a model that aligns myself with the bearish hourly order flow. So going from the hourly time frame, I zoom into the 15-minute time frame. And then going into this 15-minute time frame, I noticed that, hey, this 30-minute candle here, and this is going to be a little bit confusing, but this is a indicator that I have on my chart. It allows me to see like different time frames on like one main time frame. So these are my main candles here. So all of these candles are 15-minute candles, but this indicator allows me to see what's happening on the 30-minute time frame and the hourly time frame. And whenever I zoomed into the 15-minute time frame, my indicator showed me that, hey, this 30-minute candle here has the same 30-minute low as the hourly low. So that means that my higher time frame objective, which was on the hourly time frame, just got zoomed in, just got scoped into the 30-minute time frame. So now the way that I interpret that is that we should complete the hourly objective within the next 30 minutes instead of the next hourly, right? So I have a specific time window that I am anticipating for this objective to be completed. So within the next 30 minutes, I want to see us take out the 30-minute low slash hourly low. So now going into the 15-minute time frame, I noticed that, hey, this 15-minute candle here, its low is not the same low as the 30-minute low or the hourly low, but the way that we close there on this 15-minute candle is suggesting to me that, hey, we're most likely going to take out the 15-minute low. So like within the next 15 minutes, right, we should open, manipulate higher, preferably towards some sort of fair value gap, and have that fair value gap send us lower, attacking the 15-minute low and the 30-minute low. So that's my model, right? That 15-minute candle suggests lower prices. And what is my higher time frame telling me already? The higher time frame objective is telling me that, hey, we should continue lower towards the 30-minute low and the hourly low. So now that I have my higher time frame objective and my model, the only thing left for me to find out, or I guess have, is my entry pattern. Entry pattern's always going to be a fair value gap. With the way that you guys trade, you guys can use order blocks, breaker blocks, mitigation blocks, whatever blocks that you guys want to use. But my favored, entry pattern will always be a fair value gap. It's easy to see. There's a lot of fair value gaps, but with the way that I view prices, I know which fair value gap to use and which fair value gap should be respected in the direction of my bias, right? And so let's zoom in just a little bit more. So going from the 15-minute time frame, I should now go on to maybe the 1 hour, the 1 minute time frame, the 2 minute, 3, the 4, or the 5 minute time frame. Okay, and before we zoom in, I do want to mention that, so there is a dealing range here from this 15-minute swing high to this 15-minute swing low. And with the way that we closed here on this 30-minute time frame, we honestly should take out this 30-minute low, right? Which was the higher time frame objective to begin with. But we should take out this 30-minute swing low and expand lower towards the discount of the dealing range. So a dealing range, like I said, is created by a swing low and a swing high. And some components of a dealing range is that a dealing range is going to have a discount level and a premium level. When we're bearish, you can target the discount of the dealing range. And whenever we're bullish, you can target the premium of the dealing range. And this could be like thought back as just regular, like whenever you enter a supermarket, right? And you see discounted prices, you see a discounted item that's usually not discounted, right? You're most likely, as a buyer, you want to buy when prices are in discount. And whenever, let's think of that as in reverse. As a seller, you want to be selling when prices are high. So apply the same concept, but onto the markets here. So, like I said, because we're suggesting a bearish bias, this confluence, this idea that we should retrace back into discount is very impactful, right? It's like another person pulling prices down. It gives you more of a reason, more of a confluence for lower prices. So with that in mind, let's go on to the 1 minute time frame to really show you the entry pattern that I use to take out the 15-minute low and for prices to continue to expand lower towards the 30-minute / hourly low. So there is a really small fair value gap here, right? As you guys may not be able to really see it clearly, but it's that grayish black line that goes through the chart right there. And this fair value gap should be respected. We should respect this fair value gap and then expand towards the 15-minute low and expand towards the 30-minute / hourly low. And so let's just zoom in here just a little bit more. So you can see prices here. We opened up here on that next 15-minute candle. We opened up, we trade into the fair value gap. We tap into it, and then we start to decline. We start to decline towards the 15-minute low and expand lower towards the 30-minute low. And this, like I said, was my bias, right? And that green box is the discount of the dealing range. One thing that I do want to mention that is that the 1 minute fair value gap was created within my 15-minute model. So this 15-minute candle here is my model. And this 15-minute candle was created within 15 minutes. And the fair value gap here that I used to enter off of was created within that 15 minutes that created my model. So it's a valid entry pattern to use. And yeah, you guys can see here that I use some standard deviations to have, projected, just to have more targets in mind. So, there's that negative 0.5 level, -1, -1.5, -2 to -2.5. Usually prices tends to have a retracement during that little area there. But yeah, so that's the trade. Very simple approach, right? The three components that you do want to take away from this trade is that I had a higher time frame objective. I had a higher time frame reason for lower prices. The only thing that I needed to do was find a model that aligns myself, that is able to align myself with the higher time frame draw of liquidity and an entry pattern for me to actually enter into the trade and take the trade, right? So that's the trade from yesterday. Hopefully that was able to, hopefully that I'm able to show you guys how I view prices and how I actually take a trade. But yeah, thank you guys so much for watching, and until next time, be safe.